The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations. To determine which investments may be appropriate for you, consult with your financial advisor. We're in the midst of tax season, and unless you've requested an extension, your federal income tax returns are due Tuesday, April 15th. According to the Detroit Free Press, the IRS received fewer returns in the first 2 weeks of the 2025 season than it received the year prior. The report says misleading online tax advice circulating around social media, a flood of 1099-K forms, political animosity, and delayed deadlines in states dealing with major disasters could be some reasons why. So, if you still haven't filed your taxes yet, you're not alone. But there are some things you need to keep in mind if you're planning to file at the last minute. Joining me today is Nick Bohr, founder and CEO of Inspire Wealth. So, we've got about a little over a month left with tax season. What is the deadline for filing an extension if you don't feel like you're going to be able to get your taxes in by the April 15th deadline?
Yeah, as long as you're filing, as long as you're notifying and filing of the extension, you really have up until almost April 15th. I mean, I say almost. I would probably tell everyone, give it maybe a week before to file an extension, just in case. If you're using an accountant or a CPA, if they are backlogged, you don't want to add undue stress to yourself because they're backed up.
What are some risks that people face when they're waiting until the last minute to file?
I feel there's several. I mean, depending on your situation, I feel like there's opportunities if you're waiting to file to maybe to start preparing everything. Again, if you use a professional where you can do some planning. So maybe there's a few different things that you're not aware of that you can take advantage of. And I'll use a very easy one. If you have a self-employed business or if you're a solopreneur on top of doing your primary job, there might be opportunities to be able to deduct if you have a home office that you use really exclusively for that solopreneur or that side hustle, as a lot of people like to call it nowadays. That is an opportunity that a lot of people fail to recognize or remember. There's a lot of consumers that really either rely on TurboTax or rely on those professionals to bring ideas to the forefront. And unfortunately, as we can all relate, not all professionals are created equal, and consumers have realized if they've made a change over the years, well, I got more money back. Why is that? Everything was the same. Well, maybe it's because there was a couple quirks within your last couple years' returns that your former professional wasn't looking at or taking into account, and now the new one is. That's why when I say planning, I say, look, does it cost you anything to prepare? No, because you really don't. Nothing gets impacted until you file.
What is the process, maybe for someone who's never filed an extension? How does that work, and how does that impact your refund or if you owe?
So if you owe and you file an extension, there is going to be a little bit of penalties and interest. If you get a refund, it doesn't impact your refund. I think all of us wish that, if you file an extension and you don't, you didn't get your money back at the earliest, that the IRS or the federal government would give us some interest just like they want us to pay. It doesn't work like that, unfortunately.
Yeah.
Unfortunately, it's the same amount if you're getting a refund. If you owe, that's where there's a little bit of penalties and interest that you just need to be aware of if you're going to file an extension. And it's usually not too bad or not too drastic, but again, it's going to be a little bit more. As far as the process, it depends on what you're doing. If you're doing it through TurboTax, or if you're using a professional or a CPA or an enrolled agent, the enrolled agent or the CPA or accountant, they're going to know that process. It's usually filing a form that is letting the IRS and even the state of Michigan, if you're in Michigan, know that you intend to file an extension.
I know right now there's, all the federal layoffs going on, and there was some recent layoffs with the IRS. How do you see that impacting filing taxes this year, if at all?
I don't think on filing. And the reason I say that is because even though there's a lot of us that may think and say from time to time, like, there's some of the processes and the we'll say some of the software the IRS and the federal government use, a lot of us feel like are archaic at times, and they need to update some of those. They actually have done that a little bit over the last several years. Is some of their software has gotten newer. They have streamlined some things. So that being said, it's not like it's all on your CPA or just on TurboTax to submit everything. What happens is that you're going ahead, you're filling out any paperwork that your accountant or your EA or CPA need, and they're submitting they're e-filing the taxes on your behalf. Now, I will say one caveat to your question. The one caveat is if you are still paper filing, which I will tell you, a lot of people
really
don't see. Yeah, if you're paper filing, that could take a little bit longer. And it's because they're physically going to get or receive your return as well as any and all paperwork.
Are a lot of people still filing that way? Sorry, not to cut you off.
No, you're okay. No, not really. Some of the corporations or some of the bigger companies that are really concerned about taxes and they want to try to mitigate as much as possible, they may feel like, well, I think maybe it makes sense to do the paper filing. It doesn't make a big difference. I've had a couple professionals that we've worked with in the past that have said, "Oh, well, are you guys still paper filing? I've heard good things that there's times you can leverage more tax codes if you paper file." And I'm not going to say 100% yes, that's accurate, but I am going to say, don't look too much into that. The main thing is that you want to think about is if you have anything more than a simple W-2 and maybe you have a home you own, so you're looking at maybe mortgage interest or property taxes, and maybe you have a dependent, so you have a child's credit because they're still under 18 or 19. Like, there's things there that outside of very, what I will say is normal, meaning very streamlined filings. Unless you have very streamlined filings, I would be using a professional. I would not be using TurboTax. That's just me. As long as I've been doing this, every time we do an event, whether it's in an educational event on tax planning or taxes in conjunction with another tax or legal professional, usually we get I hate to use this term, but we get the deer in headlights look when we inform consumers that, I always ask, do you have any idea how many tax codes there are within the IRS code? And there, every time it's usually thousands. There's just thousands of them. And I said, yes. I said, does anyone want to take a guess? And no one, usually if someone does, they're usually saying, 10,000 or 15,000. And I'm like, keep going up. And they're like, really? And I'm like, yes. The last look was there was over 44,000 tax codes and tax laws within the IRS code.
Goodness. That's crazy.
Yes, it is crazy. So again, this is exactly why I say, unless you have a very simple, streamlined process, I would absolutely recommend hiring a professional or using a professional when it comes to doing your taxes, because even if you have a simple, again, solopreneur role, or you're a 1099 individual contractor on a side hustle or something you're doing, that could give you advantages that you're not used to when you were filing on your own.
Do you have any advice maybe for people who are making that transition away from maybe doing it themselves to looking into hiring a professional?
That's a very good question. I feel like, with my comments and what I usually advise consumers is, I've got a network of professionals that are like my go-to, but obviously not everyone has that. So there's a couple ways that you could start the process of trying to find a professional. If you have a legal or if you have a financial professional, so let's say you have a financial advisor or a financial planner, or you have an estate or business attorney, those would be good places to start. I would ask specific questions. I would say things like, do you have a CPA or enrolled agent or accountant that you trust that isn't going to charge me an arm and a leg, because I do have a fairly simple return. However, I feel like I've gotten past the we'll say this TurboTax.
Yeah.
Here's the other thing I didn't mention, and this is something, again, I usually will talk through when I mention things around, well, have you ever looked at how many tax codes there are in the IRS code? And I mentioned that a minute ago. The other thing I usually mention is, does anyone have a guess on how many tax codes TurboTax recognizes? It's a lot less than the over 44,000. It's under 1,000. It's about 850-ish.
Oh my gosh, it's that big of a gap?
It's that big of a gap.
Wow.
Yes. So it really does make a difference. And usually, like, even for me, when I have a client that I'm trying to educate and inform, look, let's look at, should you have a professional do this? Even if it's something as simple, you're approaching retirement and you're strongly starting to consider doing Roth conversions because you wanna get some of those pre-tax repercussions down the road out of your total pre-tax retirement accounts. There are things you should be thinking about and you could look at from that perspective. So I really feel that there's just too many people that are very nervous, and I guess I'll use the term gun shy, that they feel like they're going to get taken advantage of, or they're going to pay too much money to get their taxes done, or that their taxes are too simple to pay someone, $400, $500, $600 a year to do your taxes. And usually my comment on that is, it really depends on your situation. However, if you have just one small scenario, as I mentioned a few minutes ago, let's just use an assumption of, I'm a contractor on a part-time job, or I have a self-employment income that I do myself, whether it's I'm taxed as a solopreneur, a partnership, anything like that, that could change how your income is taxed from that scenario. So again, if you're just taxed as a solopreneur or as I mentioned, a partnership, if you're not aware of how those taxes could impact you, one of the big things we see all the time, clients really aren't aware of, they don't think about the self-employment. So until someone brings it up and they're like, well, self-employment, I'm like, how you're used to paying half of what your Social Security tax and Medicare tax is. And they're like, oh yeah. And it's like, yeah, it's the 7.65% that you normally pay. Your employer pays the other half. So if you're a contractor or you're doing your own thing, where you're taxed as, again, a partnership or a solopreneur, you're going to be taxed at the whole 15% plus the feds plus the state. It's very common that you could be in a 25 to 30% tax bracket on that income and not have much income. And that's very surprising for a lot of people. If you own a business, even if you feel like, well, my business isn't earning me, it's not bringing in much revenue. I bring in, 20,000 a year, 30,000 a year, or even as much as 50 to 100,000 a year. Those are areas where you should take a step back, have a conversation with a professional, whether it's a CPA, enrolled agent, accountant, or a financial professional that has a focus in tax planning. And the reason I say that is because there are ways that you can elect to be taxed a certain way.
Let's get into contributions a little bit. Do you still have time to max out your contributions for like your IRA or your HSA? I know those are tax deductible.
IRAs, absolutely. IRAs, you can actually contribute to an IRA until your taxes are filed. And as far as an HSA, because it's health savings related, you want to be a little bit more careful. There should still be time to contribute, but I know there's some nuances, so I don't want to give a 100%. Yes, you can still do it. It depends on your individual situations. IRAs, 100% until you file your tax return, you can still contribute.
The potential tax changes that could happen at the end of this year. Can you just kind of go over that a little bit and maybe what you've noticed, how that's impacted like people filing so far this season?
So I don't feel like it's impacted people filing per se. I do feel like a lot of consumers that we've been having conversations with, they are definitely, it's more on their radar.
Yeah.
Meaning that they're thinking about it more. Should I be making additional contributions, or should I be looking at repositioning of assets and retirement accounts this year because of the changes for next year? And that is something that is very, very important to consider. So one of the things I will mention, if you're not aware of this, the Tax Cuts and Jobs Act, which is scheduled to sunset at the end of this year, going into January 1 of next year. A lot of consumers have heard enough of this that they should at least have heard that term or that language. For those that have not, what this means is currently, on a federal level, if you're paying 12% in a federal bracket, next year, that 12% is going to go automatically up to 15%. If you are in a 22% federal bracket, you will go up to 25%. And if you are in a 24% federal bracket, you will go to 28%. Now, some people may say, well, that's not that big of a difference. Well, yes and no, right? I mean, we're talking about 3 or 4%. So depending on what your income is, depending on how much income you make, depending on are you going to be retiring soon? Are there things like that I really need to keep an eye on because of these upcoming changes? I don't want to miss something that I could have taken advantage of.
Yeah, absolutely. And it's going to feel different, like you were saying, depending on what you've got going on in your life, what your income is. Like the impacts may not be the same for everybody.
100%. And that's absolutely going to be the case. Again, if you're a higher income couple, meaning if you're over 250,000 in earned income, you're going to have a little bit more of an impact because you may not be eligible for IRA contributions that are deductible. You may be on the border for being able to contribute straightway to a Roth IRA. Like those are things that a lot of people, until they get in that situation or scenario, they may not be aware of.
Well, this has been great advice. To kind of wrap up the episode, what would your 2 cents be for anyone who hasn't filed yet? What should they do? When should they get their extensions handled?
So a big part of it, I keep saying this, but it depends on if you have a professional. If you have a professional, I would absolutely reach out to your professional. I actually was just emailing mine yesterday. And I do usually file extensions pretty regularly. And this year, I'm actually going to get everything prepared so that I know if there are things that I may want to do before we officially file. So in his email for my situation, he said, well, let's get everything prepared and we will file an extension, but then you'll have a better idea of, because I have a pretty good feeling I'm going to owe this year.
Yeah.
So I'll have a better idea if I'm going to owe, because that could impact, well, do I want to contribute to an IRA because my wife didn't have full access to a group retirement plan the whole year? Should we look at maybe contributing to an IRA where I maxed my 401k? That's something, that we may want to look at. I also have access to a profit sharing, which allows me to contribute more than the traditional maximum in the 401k, which again, I may want to do additional pre-tax contributions to help minimize some of my income that was showing last year to try to not pay as much in taxes. I tell everyone all the time, I look at it and say, well, even though you may say, well, I'm struggling with should I make the contribution or not with the ancillary or extra dollars, the question is, who would you rather pay it to? Would you rather use it for yourself for retirement, or would you rather pay it to the IRS?
Right.
It's like, okay, IRS or yourself? It should be a no-brainer. If you're having a professional do it, have them prepare everything, know where you're at, and that will help you determine, should I file as normal before April 15th, or should I go ahead and file an extension because we have some planning that we want to do before we officially file that could get our income down a little bit and keep some dollars in our retirement vehicles.
All right, that does it for this edition of Not Your Father's 2 Cents. Sources used in this episode will be linked in the description. Don't forget to file your taxes by April 15th, or make sure you request an extension. Thank you so much for listening, and I'll meet you back here next week.